Hey derivative traders, welcome back to another video tutorial. Now in this lesson, I just wanted to share some insight on how to go about like maximizing your profits each and every time when you are trading. Now there are some couple of questions that you need to ask yourself after performing your top-down analysis. Now you need to know where you would like to enter in the market. Now, for an example, on this particular trade on step index, I already identified on where I wanted to execute a trade based on the number of confirmations after I analyze the market. For an example, here on the daily time frame, let me just remove this and place it somewhere here. Here on the daily time frame, we can clearly see that the price action is currently creating those breaks of structure to the upside. Now, whenever I see price creating breaks of structure to the upside, it is a sign that price has some interest in continuously pushing to the upside. So that's the information that I would work with in order to formulate a trading idea. Now, when analyzing this particular trade setup, I realized that price had recently created a break of structure. And as you can see here, we have this huge imbalance showing us that the big fund institutions were involved in driving price to the upside around this area here. That's the main reason why we end up seeing this imbalance. Now, after identifying this imbalance, again, we need to pair it with an order block. Now, I did a bit of investigation on which order block to take. So as you can see, we have this extreme order block around this area here. And again, price pulled back into that particular order block, gave us a mitigation before we had that true move to the upside that eventually led to a break or structure. Now, after identifying this particular order block here, I know where I would like to enter. Obviously, I would like to enter when price pulls back into that particular order block. And then once we start getting that reaction, I would like to be in that trade. Now, number two, you want to ask yourself, how do you want to enter? So how I would like to enter here, because I'm on the daily time frame. Yes, you can straight up like place an order on the daily time frame like this. Let me just make this to be a bit visible. You can take your trade on the daily time frame, maybe place your stop loss below this area here, but I would safely place it below this low simply because this is where the sell side liquidity is highly likely to be protected. Now, the main reason why I'm saying this is where I would like to place my stop loss, it's it's bringing us to the third question: where do you want to get off if the trade doesn't go your way? So each and every time when you are executing a trade, you need to understand on where you would like to enter, how you would like to enter, and where do you get off if the trade doesn't go your way. So as you can see, I'm doing all those sorts of things, um, subconsciously. It's already a routine that I have whenever I want to execute a trade. So I would safely place my stop loss below this low. Now, the reasons why I want to be placing my stop loss around that low there, it's simply because this is where, right? So around this area here, this is where the big fund institutions had some interest in driving price to the upside. So obviously, whatever sell side liquidity that's resting below this low, it is highly likely to get protected because we are currently in an uptrend. So do not forget that whenever we are in an uptrend, we want to see the sell side liquidity being protected. And whenever we are in a downtrend, the buy side liquidity is always protected. So if that's the case, I want to be placing my stop loss where I know that the big fund institutions won't be driving price further to either to the downside or to the upside and end up invalidating whatever low. So again, I'm not saying this low won't be violated. It might be violated. And whenever that low gets violated, do not forget that we get what we call a trend change. Right. So after I managed to identify where I'd like to enter, I place my buy limit order. Now, number four, that's the fourth question. Where do you get off if the trade goes your way? Right. So again, before you execute a trade, you need to know where to get off when the trade doesn't go your way, and where to get off when the trade goes your way. Right. So again, where our target is the recent high. So based on the most recent high, now why am I targeting this high? It's simply because after each and every break or structure, didn't forget that with our trading strategy, we already know that after each and every break or structure, we expect price to trade back into the range. So meaning that if we eventually get that break or structure around this area here, so what we are expecting is price to pull back into the range. Now you don't want to be in that trade whenever price pulls back into the range. Just imagine right now you were up maybe let's say $500 or $600, and then all of a sudden you see that profit decreasing because of the pullback, and you don't know whether price will eventually invalidate that particular low and eventually take you out. So you're going to be holding on to a trade whereby you would be hoping that it eventually continues to push to the upside. So in order for us to manage our emotions, we need to take off whatever profits that are made available to us by the market. So the market made available $500, you take it off the table, right? Each and every time. So that's how I work. So again, based on the daily time frame, we can already see that we don't have a good risk is to reward ratio. So meaning that if you are risking your $50, you stand a high chance of making just $100, which is approximately 1:2 risk is to reward. Of which it's not, it is enough, but it's according to me, it's not that enough. So how can we go about working our way around, in order to increase our risk is to reward. Now, there comes our lower time frames. So we need to utilize the lower time frames in order to try and minimize our stop loss range. So we already know where we would like to enter, and we already know how we would like to enter, and we already know where to get off if the trade doesn't go our way, and we already know where to get off if the trade goes our way. Now if we scale down to the lower time frames, what we are trying to do basically is to try and minimize our stop loss range. Now how can we go about doing that? So we already know that, okay, we want to enter when price taps into this particular order block. Now, from my previous lessons, I did mention something that was very, very important, that these higher time frame price legs, right? These higher time frame price legs, they translate into trends on a lower time frame. So if we know and understand that, okay, these higher time frame price legs translate into trends on the lower time frame, we can utilize that bit of information in order to try and execute a trade on a lower time frame. So how can we go about doing that? Again, it's all about visualizing everything in your mind, before you can even scale down to the lower time frame. So we already know that each and every time whenever price is pushing down around this area here, we can work with the assumption that price would be creating those nice lower lows and lower highs, right? When price will be trading into the point of interest. Now, in order for us to start buying, we can't look for some buying opportunities on the lower time frame when structure is still bearish. Yes, on the daily time frame, it is bullish. We are currently anticipating that price will eventually push to the upside, but the lower time frame momentum, if it is still bearish, we can't be looking for some buying opportunities while the structure is bearish. So, what is it that we can do in this case? We can wait for price to create what? For price to create a trend change. Now, after price creates a trend change, we can then identify a point of interest. Now, an area of demand, right? An area of demand whereby we would like to look for those buying opportunities from, right? Now, I just hope everything makes sense here. I have been emphasizing the trend change logic, that it is the heart of our trading strategy, because majority of the time before we execute a trade, we look at the trend change. That's if you want to get a refined entry. So now, as you can see, I already have an idea on what is it that I would like to see on the lower time frames before um I I um I execute a trade. And again, this particular logic also follows the four questions that you need to ask yourself each and every time before you execute a trade. Because now, where do I want to enter? I want to enter from areas of demand, provided that I have a trend change, right? Now, how do I want to enter? Again, as I mentioned, that you have to wait for that trend change first before looking to enter the market. Now, where do you want to get off if this trade doesn't go your way? Now, you would be placing your stop loss below this particular demand zone around this area here. Why? Because that's where the big fund institutions would have had some interest in driving price to the upside. Now, where do you want to get off if the trade goes your way? Do not forget that the ultimate goal of scaling down to the lower time frames is to minimize the stop loss range from the higher time frame. Now, how you want to go about, like, taking your profits, as I mentioned, that you want to be taking your profits from the most recent high. So in this case, this would be your most recent high around this area here. But again, as you can see, it doesn't give us, enough. It wouldn't give you enough risk is to reward. So how I like to do it is, if I'm looking at, like, let's say for an example, the daily time frame. So I'm going to take the daily time frame high instead of the 4 hour time frame high as my profit taking area. So again, which means that my take profit would be the daily time frame high, even though I execute a trade on the lower time frame. Now let's scale down to the 4 hour time frame, and then we try to see on what is it that we have around that area there. So let's scale down to the 4 hour time frame, and we try to see, and we follow the very same logic. Right. So this is our daily time frame area of demand that we I managed to identify earlier on. And then now, do not forget that whenever price is pushing into the daily time frame area of demand, as you can see, we are having these higher highs and higher lows to show us that price is currently bearish. So again, I mentioned that you would have to wait for the most recent high that creates a breakout structure in order for us to get a trend change. Now, around this area here, I have a particular video based on flip zones when it comes to, the smart money concepts. And I mentioned that each and every time there are times whereby you would find out that there is an exchange in terms of supply and demand. Now, around this area here, that's where the exchange occurred. Because as you can see here, as price was pushing to the downside, we were breaking the lows. But do not forget that on the daily time frame, we are anticipating that price will eventually push to the upside. Now, after this break of structure here, price reversed back into an area of supply. As I mentioned previously, that around this area here, it is a good time to look for some selling opportunities. Do not forget that we need to see a break of structure, identify an order block, and then we start looking for some selling opportunities. But again, you need to put into consideration what's happening on the bigger picture. Over the past few years, I've seen traders, focusing on the lower time frames and forgetting what's happening on the bigger picture. On the bigger picture, we have pulled back into an area of demand, and then we are currently anticipating that price will eventually push to the upside and ultimately break the most recent high. So, which means that looking for some selling opportunities would be of low probability at this point. So again, from here we had a slight reaction and then price eventually pushed to the upside. So meaning whatever supply that was in play around this area here got overpowered by whatever demand that was around this area here. So in this case, after identifying this, I managed to identify this particular area of demand, right? So where do you want to enter? How do I want to enter? As you can see, I'm identifying all these things while I'm busy performing my analysis. Where do I want to get off if the trade doesn't go my way? Right. So again, you can place a stop loss around this area here. But again, as you can see, the stop loss would be very big. But in terms of the lower time frames, what I like to do is I like to place a stop loss are around the flip zone, provided that this flip zone is way too far from this particular low. But if it was around this area here, I would definitely place my stop loss way down here. So it's all about personal preference and how you would like to view the price action at that point in time. So as you can see, eventually price, started creating this consolidation around this area here. We attempted to push to the upside, price pulled back around this area here, and then we eventually had a break of structure, right, from the 4-hour time frame. Now, in terms of trade management, I've seen a lot of people, placing their entry and then their stop loss here and so forth. Now, in terms of trade management, what I would say is whenever you see price breaking the most recent high, that's when you want to move your stop loss from where you have placed it into break even. And then you just let the trade run. I held this particular trade for approximately 16 days. And again, if we go back to the daily time frame, you can see that we eventually hit our target, which is this particular high around this area here. Now, as I mentioned earlier on that, whenever price starts creating a break of structure on the higher time frame, we want to what? We want to be taking our profits. Now, the main reason why I'm taking up my profit here, as I mentioned earlier on, that we are taking our profits here because we anticipate that after each and every break of structure, price needs to pull back into the range. Now, in this case, as you can see, if you had held on to this trade and you didn't take your profits around this area here, you would have been in this huge drawdown and eventually price would have taken you out on break even, which would lead into a lot of frustration because just imagine I managed to make like around $700 on this particular trade. And then if you want to see the proof, it's there on my Discord server. I'll leave a link in the description below. So if you had held on to this trade, just imagine being in around $700 worth of profit and then eventually being taken out on break even, because you would be hoping that price would significantly push to the upside. As I mentioned in my previous lessons, that price doesn't move in a straight line. It doesn't move like this, right? It doesn't move like this. It needs to create what we call fluctuations as it is pushing to the upside. Now, the main reason why these fluctuations occur, they are created by fear and greed. So, as you can see here, if you are greedy, right, you end up losing eventually. But again, whenever I see a pullback creates what we call fear. Now, the main reason why pullbacks are created by fear, it's simply because just imagine right now, if you manage to execute a trade, it's the same thing that I mentioned earlier on. If you manage to execute a trade here on the daily time frame and you are in $700 worth of profit. Now, whenever this pullback occurs, you're going to get this fear that what if I end up losing this trade while I was in like $700 worth of profit. So in order to avoid this, you need to try by all means to know where you would like to get off if the trade goes your way. So it's setting up realistic profit taking areas. Now, in this case, it will be guaranteed that you won't get these mixed emotions of fear and greed. I know, yes, at some point in time, you may find out that price eventually breaks the high and it significantly pushes to the upside. And you might be on some, okay, I could have held on this particular trade. I would have made $20,000 or $80,000. But do not forget, guys, whenever we are trading, we shouldn't base our trading on hope. We shouldn't be hoping that price reacts in a certain way, because if you constantly hope that price reacts in a certain way, you stand a high chance of being disappointed majority of the time. Anyway, guys, just let me know in the comment section if you managed to pick up a thing or two. And if you have made it this far, give this video a thumbs up, and don't forget to subscribe to my channel, turn on those notification bells. And yeah, so this is basically it for today, and I'll see you on the next one.